Welcome back to a new video. In this episode, I'm going to share with you guys a strategy. It is basically for indices. I have shared with you a strategy before that works with forex. So this one is basically the same. The only thing that changed is the time window. So on forex, the time window was from 2 a.m. to 5 a.m. London kill zone, New York time. So if you are a forex trader, please check my other videos. This one right here, I shared it. It doesn't require a bias, a daily bias, and you can see this backtest session and these two live examples. So in this episode, I'm going to share with you the strategy that this simple and effective, all right, and it works perfectly on indices. So basically what you want to see is first of all, your time window, your business hours is from 9:30 a.m. to all the way to 11:30 a.m. New York time. Then you have the PM session, which is the 13:30 p.m. all the way to 15:30 p.m. So you have these two time windows to navigate the market, looking for setups that fits the strategy. The first step is you want to see a liquidity run. Let me explain with graphics right here. Okay. So maybe you can see this all low right here, all high, I mean. What you want to see is when you open the chart from this time, on this time, you want to see a liquidity run, meaning a price will attack this liquidity like this, and then you want to see a rejection from a higher time frame PDRA. What do I mean by that? Is above the liquidity right here, you want to see a higher time frame PDRA like this. This higher time frame PDRA can be either a fair value gap, it can be an order block, a rejection block, mitigation block, it can be a breaker block, so whatever. Next step is you want to see a lower time frame market structure shift. So when price hits this higher time frame, so when price take liquidity from this and hit a higher time frame PDRA, what you want to do is to go to the lower time frames and look for a market structure shift. Market structure shift is basically like this. Let me just grab. It's basically like this, like here, and a displacement. You want to see a displacement breaking a recent swing. Next thing, you want to enter either on a breaker or a fair value gap. So the first thing you want to enter on is a breaker. If you didn't see a breaker, then you can enter on a fair value gap right here and target at least 2.5 RR. Now I'm going to share with you some examples. So I know this is not pretty clean enough. So I'm going to share with you examples and you will understand this. The stop loss must be on above the swing or below the swing that caused the market structure shift. So in this example, you want to put your stop loss here, all right, and target at least 2.5 R. Now let's go to the examples. By the way, liquidity, all right, the liquidity can be either maybe an obvious high or obvious low that there is likely to be liquidity above it or below it, or it can be equal highs, all right, or equal lows, or maybe the London session high, the London session low, previous day high, or previous day low. Now let's go through live examples. I'm going to share with you here an example that happened yesterday on S&P ES 500. Now I did not, for transparency, I did not take this trade because I was monitoring NQ, and NQ didn't give me that entry that I was looking for, and I disregarded this ES 500, and when the move happened, I was already late to enter it. So let's go through this plan and apply it to this fraction of price action. All right, so your time window is 9:30. Just put a line on 9:30 right here. All right, then you will only looking for setups on after 9:30. Do not enter before it. Now first step is you want to see a liquidity run. All right, you can pause the video here and look for this liquidity run. Now the liquidity run, you can see that it happened right here. You can see that price attacked this old low. So basically, if you are a buyer here, retail traders will buy here. All right, and you will see that when price maybe arrives to here, they will trail their stop loss here. All right, so basically it's only logical that there will be stop losses here, so there is liquidity. Now the second step is price hitting a higher time frame PD array. In our example, we can see that the PD array is this order block right here. All right, so this is an order block, this is a valid order block. All right, next step is to go to the lower time frames and look for market structure shift. We are on the 50-minute. You want to drop to the 5-minute or the 3-minute. Now I don't recommend going to the 1-minute because it's noisy and you will find conflicting signals. So drop to the 5-minute. If you didn't find your entry, go to the lower to 10-minute. Basically, when you find a setup on the 3-minute, you will find it also on the 5-minute. So just for refining, that's it. Now when you go to lower time frames, you want to see a market structure shift. We can see here that after taking liquidity from this all the low and hitting a higher time frame PD array, you can see that there is a market structure shift with the displacement. We broke this recent swing here, and also we broke this recent swing. So you can see that the market is likely to shift sentiments from a sell program to a buy program. Now what the next step is to enter either on a breaker, all right, or a fair value gap. Now let me tell you this is my entry, this is my optimal entry. First of all, you want to measure that move that broke structure. So measure it using a fib, and you want to see the 50% of it. You want to enter on the 50% of it. All right, it doesn't matter that the 50% is aligned with a fair value gap or a breaker. Enter on this 50%. You will not miss moves. Why? Because market the price will smart money will buy a discount. So below this 50% there is discount, and above it there is premium. You want to enter on a discount. And when you want to long, when you want to short, you want to short a premium. So you can put your entry right here. Here. Stop loss below the swing, below it. Do not put it right here or something. You want to put it below the swing that caused the market structure shift, and target at least 2.5 R like here. You can see that price went even higher, you can maybe take 80% of your position on 2.5 hour and leave a runner all the way to when the day closes. I think that would be it. I think it's easy strategy. On the 8:30, this is a AM session setup. I'm gonna do another video explaining a setup that happened on 13:30 p.m. It's basically the same. Nothing will change. So stay tuned and happy trading.